Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of February 10th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week was certainly a roller coaster ride for mortgage bonds. They started the week at a high not seen since November, which means mortgage rates have been moving lower. But then if you take a look at the bond chart on the screen, that big green candle, that's Monday. And then on Tuesday, the red candle, they sold off. Wednesday, sold off again. All this anticipation of a jobs report coming out on Friday. It's going to be better than expected. Found the bottom on Thursday. And then Friday, huge surprise. Jobs report came out better than expected. Giant green candle up. Mortgage bonds were able to recover. End of the week, almost where they started. But they were capped at that ceiling of resistance right there. You can see on the bond chart. They were not able to move above that. Now, that's been capping pricing. If we cannot break above that, that's going to turn mortgage bonds lower. So, if you did not lock your rate on Friday when we hit that ceiling of resistance, we're going to cautiously recommend floating your Delaware mortgage rate to start the week, but be real careful. You might have to switch to a lock right away. If you're not a gambler, then start off just locking in whatever the price comes out on Monday. Because if we get turned away again at the ceiling of resistance, they will sell off short term and you'll see rates move higher. So we've had a nice run lower in rates. It would not, you can definitely lock it in here and take the gains. And let's take a look at that jobs report that came out on Friday from the U.S. Department of Labor. It basically showed only 113,000 new jobs added for January. And they revised December, only 1,000 jobs, up from 74 to 75,000 jobs created. That's two back-to-back bad jobs report. That's not good news on the economy. That is what helped mortgage bonds recover on Friday. And then in the report, unemployment dropped from 6.7 to 6.6%. Seems like a good thing on the surface, but when you dig into the report, it did not drop because people are going back to work. It dropped because people stopped looking for work and stopped being counted in the number. And we can see that if we look at the labor force participation rate, still stuck at 63%. That's a 35-year low. That's measuring how many people eligible to work are actually working. That number needs to come up to show that people are really going back to work. Thursday, we saw the weekly initial jobless claims stuck in the 330s, 331,000 initial claims. Now, it was down from 351 the previous week, but we're still too high for a good recovery. We need to get below 300,000 initial jobless claims every week. Federal Reserve met and made an announcement. They, as expected, are going to continue with tapering their asset purchase program called QE3. Remember, in December, they were buying $85 billion of treasuries and mortgage bonds. They decided to taper in January by $10 billion, only bought $75 billion. They just met again. They're going to taper another $10 billion. So February, they're only buying $65 billion of mortgage bonds and treasuries. Their goal is every 6 weeks when they meet to cut another $10 billion and hopefully be done by the end of the year. So as they keep pulling out of buying bonds and treasuries, it will have an effect. We will see rates start to go up. So now will probably be the best time all year. You're going to probably see the lowest rates now unless the economy just stays off track, and then the Feds may stop tapering. But we'll see how that works out. In the housing news, CoreLogic reported its home price index for December 2013. It showed an 11% increase in home prices from 2012 to 2013. And it marked the 22nd consecutive year-over-year gain in home prices nationally. Now, one tidbit though, there was a 1% drop in home prices from November to December. Now, FHA made an important update. They basically came out and said they are finally going to accept electronic signatures on loan application and loan documents from borrowers. So lenders are scrambling to roll this out. Primary Residential Mortgage is actually one of the very first lenders rolling this out. We are now accepting electronic signatures on all loan documents starting today. And then we had an update on USDA. There was the Senate and the House passed a farm bill legislation, and in that bill includes language to maintain the current USDA eligible financing areas. Now, the bill has been sent to President Obama to sign off on. If he signs off on, that's going to override the last update from USDA, which was they were going to switch to 2010 census data starting October 1st, 2014. That would eliminate currently 900 communities that are currently eligible, which would include Middletown and Smyrna. So if this bill passes, goes into law, and this isn't struck out from the bill, then that means they're pushing the current eligible areas all the way out to 2020. So 2020 would be when the eligible areas changes. That's great news for Middletown and Smyrna. Great news for USDA loans. Now, in the local news, the next free first-time homebuyer seminar is Saturday, February 15th. That's in Newark, Delaware, from 10 a.m. to noon at the Christiana Hilton Hotel. And you can register for that event by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.